Hey guys, Peter's living on this channel is for educational purposes only and is not intended as financial advice. And also, dislike, comment, share, subscribe, hit me up on Twitter. Okay, so we are living through a historic period, a once-in-a-lifetime event. There will be shrines, memorials, chapters and chapters of history books written about this current time. So don't blow yourself up over some dumb leverage trade, okay? What's happening right now is the black swan type event that was partly the reason why most of us got into Bitcoin early on at all. You know, we're seeing an insane amount of money printing worldwide among the 10,000 other things going on right now. So take a deep breath, take it slow. You know, look, I can't trade your book for you, but if it were me, I'd be DCAing as much as I physically could. If you've got to pay rent, if you're laid off, you know, that's another story. Take care of that first. You don't want to lose your lunch money on crypto if you can't buy lunch, right? So pay attention to that first. Deal with that first. All right, so I'm going to talk about mining a little bit. I'm going to talk about fundamental metrics. Then I'm going to talk about technicals towards the end. It's important to realize that Bitcoin is a living, breathing thing that continuously is dynamic and it adjusts, okay? So if price goes way down, there are domino effects. For instance, things like halving, things like hash rate, difficulty, mining profitability, break even for miners. These are all extremely important and intertwined metrics that all affect each other. So what we're seeing right now is hash rate come off significantly, which means difficulty will decrease on the next adjustment significantly, which means between now and the next difficulty adjustment, block times will increase significantly. And because block times are increasing significantly, there are some halving scenarios in which we're seeing a June 5th, basically a pushback a month halving. This will adjust again as difficulty adjusts on the next adjustment. It's also important to note difficulty cannot adjust more than negative 25% in one period or positive 25%. So even if hash rate goes to 0, the most difficulty can adjust is 25% on the next adjustment, which is in a couple days here. Probably a week. If hash rate keeps coming off, that'll increase because block times will increase. So again, it's important to just keep all this in the back of your head when you're thinking like halving's coming up, yes, but there's no exact day, there's no exact time. It is an extremely rough estimate, especially with price volatility, because that affects everything else. All the links for all this stuff is going to be down below. This is BraveNewCoin's halving estimator with 4 scenarios, more sophisticated than you'd see on like blockrewardhalving.com or whatever it is. So check that out if you're interested in this sort of thing. I'm of the belief that just make it happen tomorrow. What do I care, right? I'm not a miner. Miners are probably panicking. The other thing about miners you have to realize is their electricity costs are not your and I electricity costs. They are 4 cents or lower. They are paid ahead of time. They're on a contract. So all this stuff that's happening right now may not affect them right now, but when they renegotiate for their next contract, that may affect them. The other thing that you have to realize with mining and electricity costs is because oil is plummeting right now, there's a potential that electricity costs could just go to 0 in many places. It may even go negative, as in they'll pay you to take it off the grid. Things are so crazy right now that that's a possibility. So with that happening, that means break even for the large scale miners is even lower than 4K, 3K. So everyone worried about mining death spiral, I don't think we're quite there yet. So all right, so a few estimates. So 6 days is the next difficulty adjustment according to BTC.com. That's usually what I use if I'm looking at the network stuff. They have it listed as a negative 6% adjustment. Now they probably use a higher average than something like fork.lol, which predicts a negative 11%. I don't know if this is actually, yeah, okay, so this is the next difficulty estimate. I thought it might have been next hash rate estimate. But hash rate's gonna come off, like whatever. I'm okay with that. It's not a big deal, honestly. It needed to happen. So long as price is going down, that's going to happen. If we look at block times right now, historically, this is back since 2014. This is a 7-day or weekly moving average here. They're on the tip top of the range. We've rarely seen, most of this was massive shenanigans going on the previous times. So block times are like 12.5 minutes, something like that. Very higher end of the 10-minute retarget. This will come down in the next difficulty adjustment, but if hash rate continues to go down, block times will continue to go up. Just something, again, to keep in mind. I wanted to talk a little bit about the fundamental charts because they're extremely zoom out territory, whereas most technical analysis is, daily, weekly timeframes. This is weekly, yearly plus timeframes. This is lookintobitcoin.com. Great site, has all these metrics live updated for free. Check it out. I'll just highlight the ones I like the most, just for my own trading. I really like MVRV, just the market cap minus realized divided by market cap, standard deviation. So if you think of it like RSI, or any oscillator, sell up here, buy down here, red, green. We're currently in the middle of the buy zone. We're in the same area essentially as we were in December 18, early 2019, as far as the Z-score is concerned for MVRV. So if you're into buying some blood, historically, this is a good time to do it based on this metric. Now, we only have 10 years of data-ish. We don't have 100 years of data. The other question I'm asking myself when looking through any of this, has the playbook changed so drastically that none of this matters anymore? Some people who don't like TA, don't like FA, don't like crypto will agree strongly with that statement. In my own head, I'm thinking MVRV has worked out. You just got to trust it. You got to trust that the blood means it's time to buy. Looking at the Pual multiple, which is like issuance. Again, this will get adjusted for halving, for mining, for hash rate, difficulty, blah, 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 blah. All that stuff, it's dynamic. Again, it's in the buy range, not the bottom of the buy range where it historically sort of has been in the ultimate buying opportunity. But overall, it's in the range. This is stock to flow, a darling amongst Bitcoin maximalists. I don't know how to read this, honestly. Like, it's below the estimated, okay? Halving is coming up. Ideally, historically, again, this is just sort of like line of best fit type thing, and versus variance. So to me, if I think price is going to go up, I'm buying here. I mean, it's that simple. This is probably the most scary of all of the fundamental metrics, the logarithmic growth curve. You can see it's just completely fallen out of that. Similar to my pitchfork, which I'll show and cry silently to myself. But we're completely blown out of any prediction here for the logarithmic growth, for the pitchfork, anything like that. Just to show the pitchfork, I was talking about last video, we needed to recapture 8.1, which was the bottom of the pitchfork, the bottom of the sort of near the 200 EMA daily. This VPVR zone didn't happen, and we fell off the table. So not completely insane that happened. I mean, we lost all support and we dropped. Another way to look at this is the event that happened there on the 12th basically exploded every market maker on all of the derivatives exchanges. So what this is showing is the bid-ask spread, or bid-offer spread, percentage-wise. And you can see that as soon as this event happened, any market maker, so anybody who's like, padding's the wrong term, but anybody who's filling the book on both sides is just part of making sure there's liquidity for trading, essentially got margin called or just wiped completely. Deribit, FTX, BitMEX. So you can see how the spreads just went insane. I mean, you're seeing this as well in legacy for currencies, which is insane, for bonds, which is insane. There's a liquidity crisis everywhere across the board right now. Crypto is no different from that. So I'm kind of surprised we just didn't go to zero, because at this point, there's like nothing on the book. There's no bid, so it's possible that it could have went to zero. There's some arguments that BitMEX and Deribit had this soft circuit breakers where they kind of just shut off or halted stuff for a second. I think we're going to see an increase in the call for circuit breaker type stuff on derivatives exchanges, especially from these market makers who are gone and may not be coming back ever. All right, let's look at some more technical stuff. Again, another example of market makers getting completely blown out. This is futures forwardation or backwardation. In this case, backwardation. You can see it completely got, this is negative 13% basically on the quarterly. You don't see that if there's liquidity on the book. ETH, not as violent, but still significant. Jumping around a little bit. What I'm looking at right now is Tether, stablecoin prints, BitFEX versus Coinbase Premium. So this is Coinbase versus Bitfinex. When we're below this line, Coinbase is ahead of Bitfinex. Historically, that has been bullish. We'll see if that continues to be the case. Currently, again, Coinbase is leading Bitfinex. That has been bullish. Stablecoin prints have been bullish. The question right now is, where are all these stablecoin prints? What are they doing? Where's the money going? Is it going to exchanges? Is it buying alts? Is it being used by Chinese people for arbing between the CNY and the USD pairs? All these things are possible. You can see there's definitely a liquidity crisis for USDT, at least on the Kraken market. Historically, again, over the past year, like Tether's actually been pretty decent at being able to keep itself around $1. You know, it's dropped below, it's been above, but it hasn't been this high above, you know, basically since, or deviated from the dollar since faith in Tether and Tether being insolvent, that sort of stuff. That's what happened over here. Nobody wanted Tether, so its price plummeted. What happened here is likely a flight to safety as far as Tether versus crypto, and all of a sudden there's a huge demand spike in Tether, price goes way up. That's beginning to come back down, but it's still way higher than, you know, even in the past year. So I expect as if we continue on this, you know, low time frame bullishness, that Tether prices will come down because demand for Tether will come down. This is the legacy chart versus BTC. I talk about this one a lot, but again, VIX needs to chill so that we can recover. Historically, over the past 3 or 4 years, spikes in the VIX have led to bottom type stuff in BTC or recovery in BTC. Is that different now that we're in recessionary conditions? Is that different now that we're in a bear market for legacy? We'll find out. I mean, it looks pretty good right now, right? We'll see what it looks like next week and the week after, but if VIX finally chills out, this trend will continue, pointing to spikes in the VIX equals buy opportunities in crypto. That's just the only way I can read it. Looking at SPX versus BTC is over the past 60 days, but the past 30 days is the same. You know, we like to think it's uncorrelated, and maybe over time it's uncorrelated, but recently, since the beginning of the year, it's been highly correlated, and that's obviously what we're seeing right now. Legacy is getting dumped on, everyone is panicking, and crypto followed. That just is what it is. Low time frames, I was looking at this inverted head and shoulders, and you might say to yourself, we just dumped $1 bajillion. We don't need no low time frame stinking TA, Josh. Well, that's true, but I mean, if I'm looking for bearish or bullish things, like if I'm on the seesaw here and I'm balancing myself, I'm going to the low time frames. This isn't even that low, arguably. This is the 4 hour, because I'm looking for, is this a bear flag? Is this a giraffe? You know, some sort of, I mentioned this in the last video, some sort of concave convex thing. Is this a falling wedge? Is this a rising wedge? Is there a bullish divergence here? So it is important to look at this on the lower time frames, no matter how far we fall, no matter how far we rise, you know, zoom out, zoom in, do whatever you need to do, but definitely more optimistic seeing inverted head and shoulders type stuff at the bottom with a bull div, with descending volume profile. We're a little bit higher right now, 63.50, something like that, but yeah, so that worked out. You can see the massive gap here in volume. I think the daily cloud wanted 7,200. I'll check that out in a second. This is the 20 weekly SMA. You know, historically, we've bounced on this. If we're bullish, we bounce down from it. If we are bearish, over the past year, we've just sort of snaked in between it. And when we lost 8,100, we lost the 20 SMA. So if I'm bullish weeks from now, I mean, that's what I'm looking at. Like a hawk is the 20 SMA. Set an alert on TradingView. Weekly 20 SMA, price crosses. Give me an alert. Okay, that's when you know meat's back on the menu, boys. Otherwise, it doesn't look too great, right? I mean, you don't need me to tell you that we're below the weekly cloud, and that with everything being bearish as it is, right? Like cloud's bearish, we're below the cloud. Bearish TK, bearish lagging span. Doesn't look great. You know, on the weekly it says look for shorts over longs. This is going to fall before it's going to go back up, blah, blah, blah. But on the other hand, it also says that the mean reversion target is like 859K. Yeah, that's the weekly. Doesn't look great. Ranging is more neutral than bearish, but on a whole, if we're below the cloud, that's the litmus test. That's the daily. Again, 7,200 would be the mean reversion target. Sort of bring us back into this VPVR zone, this horizontal liquidity order block, whatever you want to call it. We spiked below 4K. Now, if you would have told me at the beginning of the year that we would spike below 4K, I would have said, you are crazy, but it happened. We lost 6-3 without a fight. It just like a hot knife through butter, right through everything. And again, I think that's a big part of that was the derivatives exchanges, plus everything else that's going on. The market makers getting blown out, legacy getting blown out. I mean, look at the silver chart. If you want to be impressed at a liquidity crisis or a drop in a traditional asset. The other video I was talking about this potential inverted head and shoulders thing. Obviously, that's failed. One thing I need to look more at is when things get super bear, super bull. I actually see this on ETH quite a bit. Is we hit the 2618 on any of these patterns, more so than hitting this 1618. I don't know what the over under is as far as percentages, but it's pretty interesting that we did hit the 2618. So I usually don't put it on charts because it usually doesn't happen. But when I put it on after a massive fall or rise, like, oh, there it was. So it is worth checking out the 2618. If you're talking about letting runners run, where do you let it run to? It's the 2618. So yeah, this idea completely blown out, obviously, at this point. And that's BTC anyway. All the alts in general have sort of recovered over the past few days a little bit with BTC. No shocker there. All this stuff's highly correlated. Looking at the CME contracts, we have one coming up March 27th, which is next week. Who knows how this is going to affect anything, if at all, just because legacy is so wrecked right now. Obviously, this down-up binary idea completely blown out of the water as well as far as these biannual contracts are concerned. So that's interesting. CME options also completely blown out of the water at this point. Look at the contracts leading into halving. This date's going to shift a little bit back, like I was talking about early on. But overall, I don't think at this point these contracts are really going to matter, just because there's so much other crap going on in the world. Looking at the market cap dominance, we've pulled back up to the 200, and as stuff has gotten more risk off, there's been a flight back to Bitcoin, or from cash to Bitcoin, whatever you want to look at it. It's been more bullish for BTC than alts since the drop. I think alts were getting a little frothy anywhere there for a minute, especially ETH. So ETH, I was talking about falling through the cloud on the last video, and sure enough, I mean, it doesn't always happen this instantaneously where it just like pukes out of the cloud. But it is what it is. I mean, there's nothing else to say than like it went bearish and everything else just went with it. So 190 would be the recapture mean reversion target, which is just in this mess of order block liquidity. 150 is going to be big level. 200 is going to be a big level. ETH is, what happens with ETH in the near term is just kind of secondary, I think. I still like the 750 target over the next 2 years. Call me crazy. That's fine. But cloud like 750, even by 2021, I would not be surprised. 750. Honestly, I'm not even like uber bullish on ETH. I'm just looking at the technicals here. So if this crosses, if we get back into the cloud, if we somehow get above 180 over the next few weeks, that's what I'll be looking at. And finally, just looking at the ETH BTC chart, it's sort of completely retraced to this enemy breakout point, and it's below the cloud, below the 200. I don't think it's going to be super impressive anytime soon, especially as there's a flight from alts to BTC in the near term. That's all I have for this one. Like, dislike, comment, share, subscribe, hit me up on Twitter, and happy trading.